Hi everyone, welcome back to my channel. Today I'll be reviewing the positions in my Roth IRA account as of the June 2nd, 2023. So in my Roth IRA account, I'm working on a beat SPY strategy. Essentially, I bought 100 shares of SPY and I'm selling one covered call at a time, trying to generate additional income. And my goal is to generate about 6 to 10% in the next 11 months. And I started on January 31st, and so far, uh, the account generated about 3% of additional income from the covered calls, so that's pretty good. And I'm putting any leftover cash into Starwood and Rhythm, which are high dividend stocks, but I'll be mostly ignoring that in my charts and calculations. These are all the trades I've made. So as I said, on the 31st of January, I started with buying 100 shares of SPY, and I sold one covered call. Then the covered call expired, and then I sold another one, etc., etc. I also got a dividend at the end of April, and I used it to buy 0.365 shares of SPY. So the most recent trades, 2 weeks ago on the 19th, I covered the call from before for 6 cents, and I started a new position, covered call actually expiring today, and the strike price was 426. And I was able to get $1.31 for the call. So in total, since each call controls 100 shares, I got $130 from selling the call. And since I paid $6 to roll or to buy back the call, the money that I got from the roll was about $124. So last Friday, the 26th, SPY was trading around 420, and the covered call was 1.5% out of the money. And the theta was relatively high compared to later expirations, so I decided to stay. So I kept the call and hoping that it would expire worthless this week. And you can see it's still $1. I sold it for $1.30, I think, or something like that. And so there was still $1 left in the value of the call, so most of it still left. So I didn't want to roll it to later expiration. So what happened this Wednesday, however, was more interesting. So SPY on Wednesday closed at about 418. And what's more important, the covered call closed at 10 cents a share. That means I could have bought it back for 10 cents a share, which is $10 total. And it was so 418, and the call was at 426. So it's about 2% out of the money and only 2 days to expiration. So, that's why the price was really low. So I definitely should have bought it back at about the 10 cents a share. And there was actually another opportunity on Thursday morning to buy it for about the same price. And unfortunately, Wednesday afternoon, I was not at the computer, so I could not buy it back. And Thursday morning, I was sleeping. So it didn't happen. And then Thursday, the market started going up. So I decided to hold till Friday. So unfortunately, the move on Thursday and Friday, both of the 2 days, was pretty strong, and it kind of messed up things. So, looking back, I definitely should have covered the call earlier. Like, this was a unique opportunity to buy back and get most of the value. More than 90% of the call actually already was expired. So I would pay 10% to get most of my money. So today, about an hour, 15 minutes before the close, I took a snapshot of what was going on in the market. So SPY was trading a little bit over 428. So the call was in the money by $2.32. And you can see the price of the call was about 236. So a little bit like if I look at the middle between bid and ask, right? So a little bit above the fair value. So there was still a little bit of time value left, but not much since only 1 hour left in trading. And so obviously when I roll, I want to roll and still get some money into my account. I did not want to buy the call back just outright and let it be. So my options were really to roll to next week, 1 week later, and get just a few cents, and the strike price would be just $3 more. So instead of 426, it would be 429. So pretty much the call would be at the money already before even, 2 weeks before, 1 week before expiration. So that was not good. So the other option I looked at, so if I roll into a call expiring 2 weeks from today, so expiring June 16th, uh, I still get just a little bit of profit or a little bit of income from rolling, but now the strike price is further away, right? So right now so the old call was 426, and the new call would be 432, which is about, say, 1.5% higher. SPY can make 1.5% in a week, in a day, really. So I'm giving SPY 2 weeks, which is kind of scary, but at the same time, if you think about it, if SPY goes up every 2 weeks, 1.5%, that would mean roughly 39, 40% return for the entire year, right? And as we know, such kind of return would be very, very unusual. It may happen this year. Hopefully it will happen this year, because I want all my other positions to go up. But 40% for SPY, very unlikely. So I am okay actually rolling 1.5% to 2 weeks from now. And if there are problems along the way, we can roll again. So I placed my trade to roll at 25 cents, get some credit of 25 cents per share. Luckily, the trade got executed at a little bit higher. You can see, I was able to buy back the call at 230 and sold the new call at 256. So it got executed at 26 cents per share. So that was good. I got extra dollar, yay. And okay, so here are the calls in my account. For some reason, Fidelity doubled the call, so I only, covered one call and started a new call at 432. And the total was about 255 minus 230, so about $24.63. So I I raised the strike from 426 to 432. I changed the expiration from today to 2 weeks from now. And the question is, did I make a mistake somewhere along the way? I really think so. I think on Wednesday, I definitely should have bought the calls back. And if not on Wednesday, even though I was sleeping Thursday morning, I could have put a limit order, to be executed at the open, or as soon as the price gets reasonably nice. And I could have been out of the call Wednesday afternoon or Thursday morning, and I wouldn't need to buy it back for $2.30. So because of this, I lost about $200, right, on this particular trade. So lesson learned. Hopefully I learned a lesson. Hopefully you too learned the lesson. And, it's not going to happen next time, hopefully. So here are the trades. These are the previous trades, including a dividend. These are the new trades. So as I said, I covered the 426 call and I started a new 432 call. And the amount of money I was able to get in was just $24. Normally we get $100 more, right? So that's a little bit less. And hopefully, SPY will continue going up, but, hopefully not too fast. These are my current positions. So SPY closed a little bit below 428, which is good. And so the call got a little bit cheaper. I think I sold it for 256 and now it's already 237. So I made some profit before the close, which is nice to see. So here is just a quick review of how the market behaved last week. So we finished, like, this is Thursday. So this week was only 4 days, right? So Friday, we were right at 420, and I was telling you 420 is a resistance. And we kind of tried to break out of it, but did not on Monday, Tuesday, Wednesday, I mean. And then Thursday, we got pushed through, and finally Friday, even bigger push. That ceiling the Senate sign off on the debt ceiling, which was great. And there was a strong jobs report as well, so that pushed the markets up. And you can see in the morning we were kind of hovering around 426 or below, which would have been awesome, but unfortunately later in the day we went up and above the 426. So that's why I had to buy the call back for $2 and a bit. So here are details. Here are the detailed numbers. So I'm just showing you the most recent numbers for the last months and a week or something. And as usual, I care about the yellow column here. What are the total profits from the covered call plus the cash that we get from it. And you can see last week, our total profit was about 1260. So that's about the 3%. Unfortunately, because the market SPY moved up, which is good for the shares themselves, but it's not good for covered calls because the move was too quick, right? So I had to buy it back. So that's why the profit now is slightly reduced. But overall, this is still the income from the calls, and we are still doing quite well. So here it is in a graphical form. So on a weekly chart, you can see what we care about, is the overall return of the account, right? So that is going up reasonably nicely. SPY itself, it went up quite a bit in the last couple of weeks. You can see it going up. And because of the quick move up, the overall profit from the covered calls is slightly less than it was a couple of weeks ago. And these are the daily numbers from like the beginning of March. And you can see here, right, the profit from the SPY calls, from the covered calls, got slightly reduced. But we are still very positive, still just tiny bit below 3% for the last 4 months, and that's still pretty good. Okay, so plans for next week. So that ceiling standoff is finally resolved. The House signed off, the Congress signed off, so U.S. can spend freely for another 2 years. And the strong jobs report this morning also helped. So I'm really expecting the markets to keep gradually going up. Hopefully not too fast, right? Because if it's going up too fast, it's not good for the covered calls. This week, I really didn't have much choice how I wrote my calls. I wanted to be as far as possible from the trading price or from the current price of the underlying SPY ETF. And at the same time, I wanted to get a positive credit. So really the 432 was pretty much the only choice. Again, as usual, I will monitor the position in case the calls somehow become too deeply in the money and they don't have any time value left. I might have to roll early because I don't want to get assigned. But other than that, most likely I will just keep the position till Friday, 2 weeks from now. That's all from today. Thank you for watching. If you like the presentation, click the like button below, subscribe to my channel. I have a couple presentations about how to sell covered calls and how to manage covered calls correctly. The second one is coming up soon. So please stay tuned. And until next time, happy trading.